Good morning, everyone, and welcome to MHQ's Foundation 101 podcast, episode 18 today. And we will be tackling not companies and foundation, not trust and foundation, not fund and foundation, but yet another animal, which is the universal life solution. And with me, no else than Ashok Sardana from Continental. Ashok, how are you?
I'm very well, thank you, Jan. How are you?
Couldn't be better. Olympic mood. Thanks a lot for joining us. And together we will try to shine a light on two tools that are, we find, both of us, very, very complementary. So what I want to do is illustrate it together with you, because when someone thinks universal life, you should often consider foundation in combination. And the same thing, when you think of optimizing your structure, you should assess how does that impact all your policies, existing or new one to complement, right? So let's jump into it, you and I. Universal life solution. What is it as a definition for a Lambda guy like me?
Yeah, and universal life it's a universal. It's called universal life policy because it's a completely flexible insurance plan which runs up to the age of 100 and beyond. And the policies are flexible and they are guaranteed solution for the clients. And these are for high net worth individuals who want to secure their families.
So you mentioned high net worth. Often the perception is, oh, so this ULI, that it's a complicated product and it's only for the ultra, but it isn't, right? It can be for other type of people, say business owner, etc. So can you talk to me about some of these scenario? Who is it for?
Yes, the ULI policy is generally for when we say high net worth individuals, but these are for professionals, ultra high net worth. Typical policy runs from $1 million and we can go as high as 200, $300 million. So yes, these are secure, guaranteed insurance solutions for high net worth, mass affluent, and ultra high net worth clients.
And also use the, yeah,
citizens who are living in any part of the world.
Yeah, and also you mentioned it here in two of the example. You were kind enough to provide families with illiquid assets. An insurance solution can be very interesting to get a cash event without having to sell these assets. And the same, I venture to guess, for a high value real estate portfolio, right?
Yeah. And most of the high net worth individuals, they do not keep cash. Every time they get some money, they want to expand the business. They want to put it back into the business. They want the businesses to grow. And whether they want to buy ultra expensive properties around the world or art, expensive cars. So they are super wealthy, but they may not be super
liquid. Yeah.
Liquid. They say they are brick rich and cash poor.
I know they sell the same thing when they want to or do not want to pay my bills. It's the same thing. So let's talk about this then. Talk about the key benefits. One of this is the ability to create liquidity when an event occurs. What do you see as the prime key benefits of a universal life solution?
Yeah, different people would have this for different reasons. One is philanthropy. I met a client yesterday, day before, and he is contributing to charity. He has a hospital in India where he's running. But I said, Mr. Client, Mr. Prospect, when you die, your children are not going to contribute. And he says, yeah, Ashok, I know they will not. So I said, why don't we take part of your current contribution and buy an insurance? So when you die, at least there'll be a big amount which we can contribute towards your charity. And he liked the idea because he knew that the children may not continue with the philanthropy that he was doing.
It's a very interesting example. In fact, we have a client that we're working on at the time who has committed amounts to a foundation. But in fact, we haven't yet talked about what happens when you're not here to keep on contributing. So do you want to create some sort of governance in the family, or do you actually could ensure that so that over time, this philanthropic endeavor can continue? What sort of other benefits do you see of using these tools? Give me some examples.
State equalization. Again, this is one client. The elder son has joined the business and the younger son is not going to join the business.
Yeah.
How do you distribute the wealth? probably leave a substantial amount of insurance. And when he dies, at least one son inherits the business and the other son inherits, has liquid cash. So we could use that as state equalization. And then is tax planning.
Yep.
Many of our clients have properties in UK and US, and all these people will have at least 40 to 50% inheritance tax. And the government will not give you any leeway. They will not say, sorry, you need to pay out the bills. They have the first lien on the properties. So buy a life insurance so the family doesn't have to liquidate the property to pay off the taxes. So that's one big reason for estate planning.
Yeah.
Uh,
And one topic that I'm particularly interested in, and I think all these are part of the same family, the succession planning that you mentioned before, but it's the business continuity. It's you can put all the structure you want, including a foundation on top of a business, if you are the driver of that business. And if something was to happen to you, and that does not mean someone passing away, it can be just someone having a stroke and being unable to function. If you do not have the cash to immediately hire someone to substitute your life for like, your business will go down, which will impact your capability to generate money for your family and there's your quality of life. So there, I venture a universal life solution can, of course, be used as well, right?
Absolutely. And I could build an identical factory like my competitor, but does not mean that I will be able to run it, because it is not the physical assets which are important, is the person who's heading that organization is the biggest asset.
Yes.
The biggest asset is sitting in your shoes, not your factory and not the infrastructure and not the machinery. So when you protect your factory for the value, why don't you protect the biggest asset, which is yourself? If you die,
Human capital.
which sometimes people forget and they underinsure themselves. Oh, I'm not worth no.
No,
You are
I'm
the
with you.
most.
I'm absolutely with you. I think it should be. Often the problem is if they are shareholders and principals, you imagine the same thing. No, it isn't. The driver of the business and the holder of the shares actually should be separate and handled separately with different scenarios. So let's look at how we could optimize whoever business owner or high net worth is considering any of these two tools. And here I illustrated, for sake of argument, a typical way of optimizing business, an operational business. You see this side business, you see some bank accounts, you see some real estate. This is a typical family here. The founder can set that up, be in the driving seat, be one of the council members, and be one of the beneficiaries. Now, I haven't illustrated yet a universal life solution here because that's the question is, what is it? And the answer is, it's another asset as part of these asset class, right?
It's a different asset class, and like you have different bank accounts, you have your properties, and this is one asset class which is absolutely liquid and guaranteed.
Does the
Property.
diversification factor that you talked about before. So let's talk about this event. Someone, let's say, having a stroke or passing away as a founder, and this can happen. So what would happen then? What would be the benefit? It's quite easy, and I'll let you illustrate it for us.
Yeah, in case the insured passes away, the money will go to the foundation, and the foundation then will distribute as per the letter of wishes to the beneficiary, whether they are family members or they're business owners, and the person has peace of mind that during his lifetime he's made those provisions.
And
And
what
when
I, yeah, and what I like about the flexibility there is that you could imagine providing something, for example, to the son who maybe is not one of the beneficiary of the foundation. Maybe you could immediately send some sort of cash to the business to ensure continuity and that it works in the absence of the patriarch. And then the rest can stay in the foundation, be managed, perhaps even be repackaged in another policy for the next generation or for philanthropy, etc. So here you have it, people, is our foundation and universal life solution competitors? No, I actually, and my argument has been,
They're not competitors. We complement each other.
And big
We
time.
up,
So yeah. And if you are undertaking any exercise of optimization of your insurance portfolio, always give a thought and discuss with your advisor on how that can tackle with a foundation, and vice versa. If you are thinking of foundation, always on your list should be, okay, what about my policies? Are they compatible with what I'm trying to build? Is there a way of optimizing? Are they still fit for purpose? And is there a way to improving my coverage and the one from my family? Ashok, something to add?
uh, just I want to share some. Sometimes I talk to the business owners and they say, "No, no, I have taken care of everything. My business managers will run the office." And no, so I asked him, "Mr. Prospect, when you go on a holiday, do you call your office to check how's everything?" And they say, "Yeah, I call my office." These are the same people who are going to look after the business while you're gone, but you can't stay away for a month, for a week. So you have to put the structure properly in place. You have to make sure that your wealth and the business continuity happens. And foundation is absolutely an important part which goes into your estate planning, into your planning for the future and for the beneficiaries. Absolutely.
Well said. Ashok Sardana, your business is doing fantastically well. You've been great supporters and educator of the market in terms of what can be done, not only in terms of the solutions that you are providing, but also of ancillary solution like foundation, like corporate restructuring, like trust. So keep on doing what you're doing. It's awesome. My regards to your team. And I'll talk to you sometimes in the future, next week. Very interesting pod where we will compare the Channel Island solutions with the UAE ADGM DIFC Ras Al Khaimah solution and see where they are similar, where they are different, and where they can work again in symbiosis. Ashok, thank you very much. Goodbye.
Thank you very much, Jan.